Hi, welcome to the Contractor's Roadmap to WIP Accuracy. First, what is a WIP report? WIP, W-I-P, stands for Work in Progress. So this report, as the name implies, shows all of your or each of your active jobs. It tracks your contract value, your estimated cost, your cost to date, and your billings to date on each project. You can then calculate gross margin percentage, the all-important percent complete, and you can also calculate percent billed. So all of this data, all of these calculations reveal whether your jobs are on track or out of balance in relation to contract or estimated cost. You also then use this report to calculate your under and or over billings, which you record on the financial statements for percent complete accounting. So accuracy matters. Why? Well, for a few reasons. One, if your WIP is inaccurate, meaning in this first instance, flawed financial statements, meaning if you don't have a correct under and over billing calculation, then your profit and your financial results for the company are off. This can lead to misleading profit recognition, meaning if your margin is too high or too low, then that's going to fool you into thinking your jobs are doing better or possibly worse than they actually are. This can lead to trouble with bonding and banking if it's not accurate, and if they get a set of reports, they get a WIP report, and it shows one thing, and then the next subsequent set of reports, reporting period, shows something worse or way out of line from the trends that they had been looking at. It just creates questions. Leads to poor decision making. If you can't tell how your jobs are doing, it's hard to make strategic financial decisions. And also a loss of visibility. Again, if you don't know how you're going to do, it's hard to make good business decisions, not knowing what to expect from your results or from those decisions. So the roadmap to WIP accuracy. So it depends on a few key points. One, using construction-specific job costing software. Now, we see people do it in spreadsheets. They try to do it outside of a system. They use a system of software that wasn't really designed for our industry. That's kind of a band-aid. You really want specific software built for our industry. It just makes it that much easier and that much more reliable. Second thing is keeping estimated costs realistic and updated. If you bid a job at one margin and it looks like it's fading and you just don't write the job down to where it's truly going to end up, you're fooling yourself, and it leads to a lot of the inaccuracies and a lot of the problems we listed in the previous screen. Reconciling costs monthly. If you don't have costs reconciled, you really don't know how you're progressing compared to the job, compared to the estimate. So timely and consistent reconciliation is key. Creating a hard cutoff for costs and billings. This is important because if you don't cut off, meaning we're going to stop posting costs and billings as of a specific date so we can close our month end and then book the entries, see how our financial performance is looking, then you're always chasing up and down, chasing a number. It never gets consistent. You end up having to go back and redo or throw it out and see what happens next month. So hard cutoff, consistency, that's key. Reviewing unusual swings in gross profit. So again, consistency. If your jobs are showing a bunch of margin one month and then it swings the other way the next, you need to review that because it's usually, again, something related to consistency, related to cutoff, related to estimated costs and keeping those updated, and standardizing billing and collection processes. If you don't have a good process for when you're going to bill timely and consistently every month, it leads to swings in the WIP, and it also leads to problems with collecting. If you don't bill for 2 or 3 months thinking you'll just get to it someday, well, eventually that catches up to you. If you get really busy with a lot of work in process and you need cash because you're ramping up costs but you're not billing consistently, that's a problem. Change order management and reflecting those changes on the WIP. This kind of goes back to number 2 with estimated costs. If you're not reconciling and tracking change orders and reflecting those on the WIP, you're going to see swings in billings, swings in revenue, swings in gross profit, and so it just makes it hard to see if you're on track or meeting expectations. So the strategic value of an accurate WIP. Well, it helps you for a variety of reasons. One, as I mentioned earlier, forecasting, strategic planning. It's hard to forecast earnings and cash flow if you don't know how your jobs are doing, and then as a result, you don't know how the company's doing. It gives you credibility with sureties and banks. So we talked about not having an accurate WIP can give you problems, but the opposite is true if you have reliable WIP reporting. Your surety, your bank, they have confidence that you know how your jobs are doing, that your data is accurate, and then they can make decisions to support you to grow and prosper and get the next job. So you avoid unpleasant surprises at year end. A lot of people do the WIP inconsistently. They don't do it on a regular basis, whether that's monthly, quarterly. They'll do it at year end. They'll do it at odd times in the year. So you really end up getting caught by surprise if a job faded, or missing change orders. If there's holes in your WIP or your WIP process, you really don't know because you're not looking at it monthly, so you don't have an expectation. And so it's a surprise, and then it's a fire drill to figure out why you have that surprise. And last, it builds a foundation for strategic planning. If you know how your forecasted earnings look, if you know what your cash flow looks like, you can start making strategic decisions to grow the business, to strengthen your balance sheet, to find more work. So what's the next step now that we've covered what the WIP is, why it's important, and why you need to focus on it? Download our free guide, the Contractor's Guide to WIP Accuracy. Or you can also take the next step if you're ready, and you can join our Atlas Growth Model program, get the free WIP course, and start projecting and using your WIP for strategic decision making, looking at profitability, cash flow, bonding capacity. It gives you confidence to know that you're making good decisions and you're able to see set an expectation before you get there. Thank you. We'll see you on the next video.